Today we are unpacking Elon Musk's new banking plan as a strategic business concept.
And we will keep the focus careful, because no source link was actually provided here.
So we will avoid claiming hidden details, dates, licenses, or confirmed product features.
Instead, we will explain the likely business logic behind a Musk-style banking plan.
Then we will build a SWOT analysis and a most analysis around that concept.
Finally, we will create a commercial for the new Sentinel podcast.
The basic idea is simple. Combine money movement with a high-engagement digital platform.
In plain English, that means turning daily online activity into financial activity.
A banking plan of this kind would likely center on payments, transfers, and account-like services.
It could also aim to reduce friction between communication, shopping, content, and finance.
The strategic ambition is not just to build a bank in the traditional sense.
It is to create an ecosystem where financial services become part of everyday digital behavior.
That distinction matters because banking is regulated, trust-heavy, and operationally complex.
But digital platforms thrive when they make repeated actions faster, easier, and more convenient.
A Musk banking concept would probably try to merge those two worlds.
The promise would be convenience, speed, and a unified user experience.
Imagine a user discovering content, messaging someone, buying something, and sending money.
In that model, each action supports the next, instead of living in separate apps.
That is the attraction of an integrated financial platform.
It gives the operator more engagement, more data, and more ways to monetize activity.
For users, the selling point would be fewer steps and less switching between services.
For businesses, it could offer easier customer payments and potentially new advertising tools.
But there is a major challenge. Banking is not just another software feature.
People are emotional about money, and regulators are strict about consumer protection.
A financial platform must handle identity checks, fraud prevention, disputes, and compliance.
It also must earn trust from users who may already have banks they rely on.
That means execution matters more than hype.
A bold plan can attract attention, but banking requires patience, safeguards, and credibility.
Let's move into the SWOT analysis, starting with strengths.
The first strength is brand attention.
Anything connected to Elon Musk tends to generate conversation, debate, and media interest.
That attention can lower the cost of launching a new financial product.
The second strength is ecosystem potential.
If financial tools are connected to an existing digital platform, adoption can be easier.
Users may not need to download something entirely new or learn a separate environment.
The third strength is product ambition.
A banking plan linked to a broader technology vision could push beyond basic checking features.
It might focus on instant payments, creator payments, business transactions, or platform commerce.
The fourth strength is data-driven design.
A platform can observe user behavior and design financial tools around real user patterns.
That could make services feel more relevant than standard banking menus.
Now the weaknesses.
The first weakness is trust.
Financial trust is harder to build than social media engagement or product curiosity.
Users may enjoy a platform, yet still hesitate to store money there.
The second weakness is regulatory complexity.
Banking rules are demanding, and mistakes can be expensive.
Compliance must be designed into the system, not added later as decoration.
The third weakness is customer support.
Money problems require fast, clear, human-sensitive resolution.
If a payment fails, a transfer freezes, or fraud occurs, users expect immediate help.
The fourth weakness is reputational volatility.
A high-profile founder can be an asset, but also a source of risk.
Public controversy can affect whether users trust a financial product.
Now the opportunities.
The first opportunity is serving creators, entrepreneurs, and small businesses.
A platform with built-in payments could help people get paid where their audiences already are.
The second opportunity is embedded commerce.
If users can discover, discuss, buy, and pay in one flow, commerce becomes smoother.
The third opportunity is global reach, if local laws and partnerships allow it.
Digital financial tools can scale, but only when compliance and infrastructure are properly handled.
The fourth opportunity is differentiation from traditional banks.
Traditional banks often feel slow, fragmented, and impersonal to younger digital users.
A technology-first banking experience could appeal to people who value speed and integration.
Now the threats.
The first threat is regulation.
Financial regulators can slow, restrict, or reshape a plan if risks are not controlled.
The second threat is competition.
Banks, fintech firms, payment apps, and digital wallets already fight for user attention.
The third threat is cybersecurity.
A financial platform becomes a high-value target for fraudsters, hackers, and scammers.
The fourth threat is user resistance.
People may like convenience, but still separate social platforms from personal money.
That mental barrier could be hard to overcome.
Now let's shift into MOST analysis.
MOST stands for mission, objectives, strategy, and tactics.
It helps convert a bold idea into a practical operating plan.
The mission would be to make financial activity seamless inside a digital ecosystem.
That mission focuses on reducing friction in payments, commerce, and everyday money movement.
It also suggests a bigger ambition, making the platform a financial operating layer.
The objectives should be measurable, realistic, and tied to trust.
One objective could be user adoption of basic payment features.
Another could be transaction reliability, measured by successful payments and low failure rates.
A third objective could be compliance readiness across each market entered.
A fourth could be customer satisfaction when resolving financial issues.
Those objectives matter because banking cannot succeed on downloads alone.
People must trust the platform with sensitive information and real financial value.
The strategy should likely be phased.
Start with lower-risk financial features before moving into more complex banking services.
A phased strategy could begin with peer payments or merchant payments.
Then it could expand into broader account-style tools, depending on approvals and partnerships.
The strategy should also emphasize compliance by design.
That means legal, risk, fraud, and security teams shape the product from the beginning.
Another strategy is partnership.
Working with licensed financial institutions may reduce operational and regulatory burden.
The tactics are the specific moves.
First, build simple payment flows that users can understand in seconds.
Second, make identity verification secure, but not unnecessarily painful.
Third, provide transparent fees, clear dispute processes, and accessible support.
Fourth, create fraud detection systems before major scale arrives.
Fifth, educate users on what the service does and does not do.
Sixth, launch carefully in markets where compliance requirements are clearly understood.
Seventh, support businesses that want simple ways to accept payments from audiences.
The key takeaway is that the plan is not only about technology.
It is about trust, regulation, execution, and user behavior.
A brilliant interface cannot compensate for weak financial controls.
And a famous brand cannot replace reliable service when people's money is involved.
If executed well, the opportunity is large.
A platform that blends communication, content, payments, and commerce could become deeply useful.
If executed poorly, the risks are just as large.
Financial errors, poor support, or regulatory failures could damage the entire ecosystem.
So the success question is not whether the idea sounds exciting.
The real question is whether the infrastructure can match the ambition.
Now let's bring in the commercial for the new Sentinel.
Looking for a podcast that goes beyond surface-level headlines?
Welcome to the new Sentinel.
The new Sentinel is dedicated to in-depth discussions and deep dives across a wide range of topics.
From the glitz and glamour of pop culture to the strategy behind military operations, we cover it all.
Each episode is thoughtfully crafted to give listeners a comprehensive understanding of the subject.
You get expert interviews, detailed analysis, and engaging storytelling in every episode.
Whether you love pop culture or follow global security, the new Sentinel has something for you.
Tune in, view, subscribe, and comment to stay informed and entertained.
And if you are an entrepreneur, the new Sentinel can help advertise your product or service.
Reach listeners who care about ideas, analysis, culture, business, and world events.
The new Sentinel is where curiosity meets clarity.
Subscribe today, join the conversation, and let your voice be heard.
Returning to the banking plan, the commercial actually highlights an important business parallel.
Attention is valuable only when it is converted into trust and action.
That is true for podcasts, platforms, entrepreneurs, and financial products.
For a banking plan, the trust hurdle is especially high.
Users need to know their money is safe, their data is protected, and problems will be solved.
That is why customer support should be treated as a strategic asset.
A payment platform should not feel confusing when something goes wrong.
Clear communication can become a competitive advantage.
Another important issue is positioning.
Is this plan a bank replacement, a wallet, a payment tool, or a business commerce layer?
Each positioning choice creates different user expectations.
If users hear banking, they expect bank-level safeguards.
If they hear payments, they expect speed, simplicity, and reliability.
If businesses hear commerce, they expect sales tools, reporting, and predictable fees.
So messaging must be precise.
Overpromising could create disappointment or regulatory attention.
Under-explaining could slow adoption because users will not understand the benefit.
The strongest version of the plan would probably start with a narrow, excellent use case.
For example, making it very easy for users to send and receive money.
Or helping creators and small businesses accept payments from engaged audiences.
Then, after trust grows, the platform could expand carefully.
That path is less glamorous than an instant financial revolution.
But in banking, careful sequencing is often smarter than dramatic acceleration.
Let's summarize the SWOT in one clean pass.
Strengths include attention, ecosystem potential, ambition, and data-informed product design.
Weaknesses include trust barriers, regulatory complexity, customer support demands, and reputation risk.
Opportunities include creator payments, embedded commerce, international expansion, and fintech differentiation.
Threats include regulation, competition, cybersecurity risk, and user hesitation.
Now the most summary.
Mission: make financial activity seamless inside a digital ecosystem.
Objectives: adoption, reliability, compliance readiness, and customer satisfaction.
Strategy: phase the rollout, design for compliance, and use strong partnerships.
Tactics: simple flows, secure verification, clear fees, fraud control, education, and careful market entry.
That gives us a disciplined way to evaluate the plan.
Not as hype, not as dismissal, but as a serious strategic proposal.
The most important point is that banking is a trust business before it is a technology business.
Technology can improve the experience, but trust determines whether users bring their money.
And trust is earned through reliability, transparency, compliance, and support.
If those pieces align, the plan could become a powerful platform expansion.
If they do not, the risks could outweigh the brand advantage.
That is the balanced view.
The idea is ambitious, but the execution requirements are unforgiving.
Thanks for listening to this strategic breakdown.
And remember to check out the new Sentinel for deeper conversations across culture, security, and beyond.